We have Rahul Sharma to talk more about markets. Rahul, how do you see today's action so far till 12, both on the Nifty, Bank Nifty? One would have expected some short covering, but it did not really come by.
Yeah, very good afternoon. So, 2 points here. One is, with the modern day trading, we are actually seeing all the negative news getting digested in a day or two max. So, the good thing is the consolidation which is happening as we speak is actually suggesting that probably the negative news that we had yesterday has been more or less digested, and it is now what the global trends would continue. My sense is technically below 19,480, there is a room until 19,300 on the downside. Now, the reason for this is in July, the average number of contracts that FIs had in index futures on the long side was around 80,000 contracts. Yesterday was the first session where they have gone short on the index futures around 4,000 contracts. It is not as big as the kind of longs that we've seen, but we have to watch that data closely. What that suggests is if we continue for a few days more, we could very well be headed for 19,300, 19,000 at max on the downside. But looking at the macro picture, these would be good buying opportunities because technically speaking, this would only be a retest of the breakout that we've seen. So my reading is this is a welcome correction. We have to be ready with our buy orders at lower levels. And eventually, I think the major undertone of the market, which is bullish, should play out. So my sense is we are still on track towards our targets of 2,200 and 21,000 on the upside by the year end. But it's just a short-term correction, probably which may last for a week or so. Post that, we should see markets rebounding.
What are your trading ideas, Rahul, in this kind of a market?
So, two sectors which look good to us. One is on the sugar space. So, Balrampur Chini is one stock which has been, attempting to break out from its consolidation. The good thing is the technical health has improved of late, and what we see is the breakout should eventually take place. Where does the breakout happen? Around 410 and above. The targets are placed at 430 and 450 on the upside, so one can look to be a buyer in Balrampur Chini, have a stop loss placed at around 388 on the downside. So this is one stock which looks good to us. Second is more of an investment idea where we are taking like a 12-month horizon. White goods major Voltas. Now this stock has been a major underperformer for the entire rally that we've seen in the broader markets. But the good thing is it has taken support around the 2020 top. The February 2020 top was somewhere around the 740 mark. The stock almost went there, saw a rebound, and now what is happening is after a few weeks of consolidation and grinding forward and backward, technically things have improved for the stock. In fact, in the short term, there is a breakup from a falling channel as well. So this is indicating that at least in the short term, in the medium term, one can expect a target of 950 on the upside. But if you have a slightly bigger time frame, there is a very good possibility that we head towards the 1100 and 1200 mark on the upside. So from a trading perspective, one can look to buy from a 1 to 2 month perspective, one can expect a target of 950, but slightly longer time frame, one can expect even higher upside. So Voltas can be bought, stop loss placed at 740 on the closing basis. And we feel that this is one stock which should be on your shopping list, especially in this correction.
Okay, should be on your shopping list. But what about Man Infra? How that is buzzing in trade today, seeing some volumes over there as well. How are the charts looking like? Are you getting any indication over here?
Yeah, so the stock has been performing really well. In fact, the last leg of rally that came, that was backed by volumes in July, post which it has continuously stayed above its moving averages. Seeking of a resistance. Now the stock has entered into a blue sky territory once the January 22 top has been taken out. And my sense is in such setups, we've seen in the market that the best thing to do is have trailing stop losses and ride the trend. So as of now, what I can see as a trailing stop loss is also quite deep. Somewhere around the 130 mark, one can have a stop loss in case you have long positions. It is anybody's guess as to what kind of an upside that the stock can have. So best thing to do is just keep on moving your stop losses.
There is a kind of a big move happening in some of the NBFC counters. Look at Poonawalla FinCorp crossing the 400 mark. on reasonable volumes. What kind of chart patterns can we expect there? 420 now, my goodness.
Yeah, so there is a big volume push that is happening today. Finally the stock has broken out from the 400 area where a lot of I think analysts had the targets at. But now the thing is the stock has entered into a new zone where now the next forward-looking targets would be around 450, maybe 500 as well. But the best thing to do is book some profits here because the stock has been a slow mover, barring the move that we are seeing today. Broadly, the stock has been on the slower side, and NBFCs have done well in bits and pieces. It has not been a secular rally for NBFCs as such. So my sense is if you're getting profits, you should take some profits, at least 50% from at these levels. Maybe look to buy again on dips, but my sense is it's best to take some money off the table.
Rahul, also, just if you look at Pharma, and the Nifty Pharma today is obviously among the top sectoral gainers, but that has the pack overall has been buzzing in trade. Anything interesting that you find in the Pharma pack?
Yes, so that's a good question. In fact, Pharma has had a phenomenal rally, the Pharma index doing extremely well. We have to look at laggard. So in the Pharma space, there is one stock which comes to my mind is Granules India. So this stock has not really participated the way something like an Oro Pharma would have done, something like a Sun Pharma has done. On a comparative basis, there is a lot of headroom to be caught up over here. And technically speaking, the stock has formed a base around the 280, 275 mark, and it is on its way to recovery. Now, in terms of targets, I am expecting around 360 to 375 being tested in a month or so. Technically, this is one of those stocks which can play a very good catch-up rally. 300 seems to be a very solid support going into this trade. So one can have a stop loss just below 300 and go long onto this. I think there is a good 10 to 15% upside to be had in the short term, maybe slightly more if you have slightly 1 to 1.5 month kind of a perspective.
Okay, Rahul. Thank you so much for joining in with us this afternoon on Markets at Noon on ET Now. It's always a pleasure having you on the show.